The private banking sector that used to be Switzerland to rule is now moved to offshore facilities like Singapore. Steen Jakobsen, Saxo Bank. A drop in Switzerland's retail sales is another indicator of the troubles facing the Swiss economy. Steen, how much of a concern is external factors for Switzerland's businesses?
I think at this stage is primarily external factors. Clearly, of course, with the strong Mittelstand, the SME sector in Switzerland, it's very dependent on its export market share. And as global growth is coming down, of course, this is under pressure. On the domestic side, I think, of course, negative interest rate is starting to have a significant role at a bare minimum in the banking sector, as we saw this week with UBS's reporting. So I think, but right now I think it's 80-20 external factors which is slowing down the export machine of Switzerland. We have to remember Switzerland runs a current account surplus of 7 to 9% in an average year, and of course this will be challenged in a global environment of slower growth.
UBS report shows the bank was feeling the effect of low interest rates and a strong franc in 2015. What are the main headwinds for banks in Switzerland in 2016?
I think the main headwinds remains of a strategic nature. I think Switzerland's banking system is now in a position where it needs to rebalance itself, reposition itself away from being the prime provider of private bank services in the world. With the opening up towards the U.S. tax authorities, of course, they left themselves vulnerable for the kind of exit of capital we see from the banks. And on top of that, of course, the environment with every single coupon on government bonds from 0 to 10 yielding negative also make it increasingly difficult to maintain both deposit and private bank business, which ultimately you will have to charge for even having deposits on the accounts. But, I think primarily the private banking center that used to be Switzerland to rule is now moved off to offshore facilities like Singapore primarily.
Can we expect any preemptive moves from the SNB regarding the Swiss franc, or will a move from the SNB only follow further monetary easing by the ECB?
Well, the SNB has at least in the recent past, of course, last January, tried to move ahead of what they perceived the ECB to be doing with the setting free the Swiss franc last year in January, which happened as they very rightly expected the ECB to engage in a quantitative easing program. Of course, again, we over the course of the last week that Jordan and other SNB members have been out saying that they have the full balance sheet at their disposal and that the Swiss franc remains overvalued relatively to what they see as a long-term value of the Swiss franc. But I doubt that with the present trend in the FX market, where the Swiss franc against the euro trades at a multi-month high at 1.1116 as euro on ISV, I think that in itself indicate that the market is expecting them to be proactive, and I think they've had some tailwind from the fact that the currency at the time is trading very relatively weak to what we've seen in the past 6 months. So no, a long answer to a short question. I don't expect them to be preemptive, at least as long as we are above 111 on the Euro-Swiss cross.
January this year saw the franc returning to its lowest level since the removal of the currency peg in 2015. What's your outlook for the Swiss franc throughout 2016?
I think all of your questions have sort of focused on essential points, which is that the banking sector is under a reconstruction. The strategic ability for the banking sector to prevail in the private bank sector, I think it's getting increasingly difficult. I think the negative interest rate is a punitive action against both savers, but certainly also depositors in the Swiss banking system. And on top of that, of course, with a central bank which continues to communicate in their rhetoric that they think the Swiss franc is overvalued. I think the most likely scenario right now is that we see a weaker Swiss franc, and certainly this sort of macro perception of the future, intermediate future for the Swiss franc is also confirmed by price action. So I run a number of technical models. All of those are right now short the Swiss franc against the euro. So I think there is a fair chance that we'll test 113, 114 if the SNB is able to maneuver its balance sheet and their action through the incoming further easing from the ECB in March. So a slightly weaker Swiss franc, I think, is in the cards.
Well, Steen, thank you for your insights. That's all from me today. But Sam Meredith will be bringing you our midweek forecast tomorrow, so be sure to check back.